If it's Monday, we're talking stocks here at Winch Financial. I'm Laura Veskupik, Marketing Director, and I'm here with Christian Peterson, our investment analyst. And Christian, big day for Google on Friday.
Yeah, really big day for Google. They announced earnings, and the earnings came in much better than expected. They beat on earnings per share pretty handily. They also beat on revenue, which was a big surprise for a lot of people. They thought that their ad revenue had been falling off. We've seen that through the last half of 2014 and the first quarter of 2015. So it was a big surprise that they were able to generate the revenue that they did, and I think that's what pushed the shares up. Shares on Friday surged over 16%, which itself was really big. And you can see that on smaller cap stocks, something would surge 16%, but a large company like Google going up 16% was a big deal. And given that the shares are trading at between $600 and $700 each, it added $52 million of market cap in one day, and that was an historic day. No other company had added that much, $52 million to their market cap in one day. That was a record, so that was huge.
So big day for the market, but not everybody was participating.
Yeah, we're seeing more and more of that. The indices right now, you look at the S&P 500, the Dow, the NASDAQ, the NASDAQ hit a new all-time high last week, higher than it was during the dot-com bubble. S&P 500 and the Dow are just slightly off their all-time highs. So the market is very high, but we're not seeing broad participation in the market. It is the Apple, the Google, Netflix also had a tremendous week. Last week they posted earnings and they surged up. I think it was 12% or more on that day. So we're seeing big companies, fewer companies, big companies. That's pushing the indexes up, but we're not seeing broad participation. The smaller companies are not doing as well, and not just the small companies, but across the board, only a few of the sectors are what's really pushing it up. You see biotech, technology, to a lesser extent, consumer discretionary. The rest of them, industrials, telecoms, consumer staples, certainly utilities, are not. And I was just looking at some statistics this morning to give you an idea. This morning, here it is, Monday, it's about 11:30 as we're taping this, and the markets are up slightly. They're up about 0.2%. But looking at the advancers and decliners, I just got the statistics before I came to talk to you. Only 33% of the stocks in the New York Stock Exchange, and that's about 7,100 of them, only 33% are advancing. 60% of the stocks trading right now are declining. And indeed, also highs and lows. Of those 7,000 stocks that are trading on the New York Stock Exchange today, 442 are hitting a new low as we speak, when only 294 are hitting a new high. So we can see there's much more downtrend in the stocks than there are an uptrend, but the indices are up. And again, this is because fewer companies are advancing and bringing it up. But the broader, the smaller ones, the ones that you don't see, they're struggling. So we call that narrow leadership, and that can be a concern. You like when the indices are advancing, you'd like to see broad participation. We're not seeing that right now. So that's something to keep a close eye on.
Definitely, and as the earnings season advances, we'll have plenty to look at.
We'll see that too. Earnings season is going along pretty much as predicted. We had a few surprises again, but broadly speaking, it's coming in as expected. So we don't see the market really reacting too much to it yet. We'll see as it gets into the next 2 weeks to tell the tale. But so far, so good. I mean, earnings are strong. They're doing okay.
Great. Mm-hmm. Okay, plenty to look at, and we will be here again next Monday. So we'll see you then. Thanks.